The escalation of conflict between Israel and Iran keeps stocks skittish even as there is no disruption in trade so far. Realty and IT notch gains while healthcare and autos drag.
Biocon launches a 4,500 crore QIP to raise funds to pay down debt of Biocon Biologicals and buy convertible debentures from investors in the biologics arm.
Vishal Megamart, where the promoters have offloaded nearly 20% via a block deal worth almost 10,000 crores, bringing their stake down to near 55%. Private investors and promoters Kedara and partners PE rake in the moolah.
Zee Entertainment has proposed the issue of nearly 17 crore warrants to promoters at a price of around 132 rupees per share. The warrants, once converted within 18 months, will up the promoter stake to over 18% from 4% now.
US President Donald Trump bid G7 leaders an early adieu to head home as tensions between Israel and Iran escalated. Earlier, Trump had asked people to vacate Tehran, sparking reports of a likely US intervention.
A very good afternoon. You're watching Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Mangalam Malu. Well, it's turning out to be definitely a sluggish session for us. We have the Nifty, which is down around 80 odd points, the Bank Nifty, which is down around 192 odd points, and the mid-cap index, which is down around 0.3%. Overall, the mood of the market is definitely cautious. We're tracking what's taking place geopolitically at this point in time, and that seems to be top of mind. Yesterday, we did see a reversal in terms of the sentiment for trade in the second half, with the advanced decline ratio ending in the positive terrain. As of now, we have the advances which are lagging behind the declines. Let's see whether there's any kind of respite as we go along. But overall, the mood is definitely cautious at this point.
The mood is cautious. In fact, it turned all the more cautious after that Donald Trump comment that came in saying that maybe he hasn't left G7 because of, trying to
because of
smoke,
a ceasefire.
Because of a ceasefire or make them smoke the peace pipe. That's not happening. So the street believes that there could be some more escalation, and as a result of which, we are seeing that decline. The Nifty is down about 81 points. What's interesting, however, is that there is a three-way battle for the Nifty, which is the Nifty Bank, the IT index, and Reliance. Yesterday, we had Reliance that supported the cause of the frontline index. Today, the Nifty Bank has moved to the low point of trade, and we have the IT index, which has moved higher. And look at Reliance. That is giving up nearly all of its gains from yesterday, currently lower. So it is Nifty Bank and Reliance, which is pressurizing the frontline index, whereas IT is supporting it. All in all, we have the index which is still stuck in that pre-RBI policy range of 24,500, 24,600 to close to around 25,100 itself. The broader markets in focus, 1,500 stocks which are declining. But healthcare stocks are the ones which are declining in today's trading session, and we have one of the managements with us.
Yes, absolutely. Well, let's talk to Granules. Granules India is the first management on the show. Q4 FY25 revenue was impacted by price erosion. Their R&D spend has risen in FY25, and the company is probably going to increase R&D expenditure going forward. We have with us Priyanka Chigurupati, who is the executive director of the company, joining in to discuss the business going forward. Priyanka, hi, welcome to the show and good to see you on air. Just wanted to start by talking to you about, the Q4 which has gone by. It was a quarter which was slow in terms of the revenue, which was up only around 2%. You were impacted by price erosion, demand issues in the API segment as well as the PFI segment. And you also had that warning letter on one of your Indian facilities. Give us a sense in terms of what Q1 is looking like and what is the outlook for FY26?
Well, good afternoon, Ekta and Mangalam. I think just to start off with the first part of your question, Q4 was a little bit muted, but if you look at the overall numbers, I still think we did rather well despite the situation that we went through. If you look at the overall margin portfolio, our top line stayed a little bit, actually it grew 10%, and more importantly, our bottom line, which is more important, grew almost 24%. So I think we did rather well despite the entire scenario. Now, in terms of the situation we have on hand, I think we'll take another 1 or 2 quarters to clear the warning letter, hopefully, and back soon after that, everything will be back on track. So Q1, again, we are still focusing on remediation activities, which will happen in Q2 and Q3 as well. And post that, we should be full running up to 100% capacity. Well, up there. I wouldn't say 100%, but up there.
Right. But if you could, give us a sense, currently we're in this VUCA world. We have a fair amount of uncertainty. There's higher crude prices. There's geopolitical tensions across West Asia. How is that likely to impact the API or PFI prices? Is there anything that you're seeing on the ground right now?
Well, right now, I just think it's a demand supply issue, at least for the products that we're in. And the products that we're doing really well on, it's primarily a demand issue. So we're actually supplying everything we can, and we have more demand than we can supply. So we're actually doing pretty well. The only product where we're facing a little bit of headwinds is paracetamol API. That's because of oversupply in the market today. And going forward, I see that easing because we're doing a lot of business development activities to focus more on value-added para products.
So how much have paracetamol prices, API prices been depressed, say, as compared to a year ago? And what is your outlook in terms of prices?
Well, if you ask me overall, I can't really put a number to it because it depends. If there's APIs, PFIs, and finished dosages, and then it's also very region dependent. But I would say that there has been a decline. But there's also now people coming up with the issue of steady supplies. That's coming back more aggressively than ever because there have been some entrants into the business claiming that they can supply, but they're not able to. So I see an opportunity for us going forward.
Okay, so you are seeing some opportunity in terms of paracetamol API prices probably stabilizing.
Yes.
Just wanted your, sense in terms of how you're playing the GLP-1 opportunity. You've bought this Swiss CDMO company, Sen Chemicals, in April. That's going to give you, a foray into the peptide segment. GLP-1 is going off patent. Semaglutide is going off patent in emerging markets as well as India. Tell us, how are you capitalizing on it?
Like you said, the GLP-1 market is massive and is projected to reach, if I'm not mistaken, about 150 billion by USD by 2030. The US continues to be a major market for the peptides. But if you take a step back and just look at the reason we acquired Sen Chemicals, we wanted to leverage Sen's strength in the CDMO space. They already have some business with some innovator companies. So it was a company that we acquired for the technology. And of course, it has some revenue already in place. Now, apart from our entry in a small way into CDMO, we are going to be focusing on some GLP-1s. We're working on a couple of APIs right now, and also some finished dosages through some partnerships. And we'll see how that goes through. Once we see some headway in there, we'll certainly keep you posted.
Right. You've spoken about, 1 or 2 quarters of remediation for Gagillapur. Just wanted a little more on, is there a possible re-inspection that happens out there? There are some drug approvals which are pending as well. And how are you looking at growth X of Gagillapur?
Growth X of Gagillapur, first of all, let me just reiterate something. Gagillapur is functioning fully. Whatever reduction in quantity that we have done has been very intentional to focus on remediation activities. So we hope that in the next 1 or 2 quarters, we have a correspondence or dialogue with the FDA. And I would believe that they will come back for a re-inspection, which we will be fully ready for.
By when do you expect that?
Well, it depends, right? I can't put an exact date to it, but we're hoping by end of this year or latest by Q4 fiscal, we should be.
No, I'm asking from this in the sense that when exactly does your remediation get completed, and hence, you can assume maybe a quarter or 2 from then on.
See, remediation, we are in the, I would say, last phase of remediation. So I think in a quarter or about 4 to 5 months from now, we should be done. And post that, but we are continuously sending correspondences. We're sending our updates to the FDA. And the FDA can come in whenever they want to, but we expect them to come later half of this year. And by the end of this year or Q4 fiscal, we hope to have everything.
Right. So let's look at it from the other angle then. Gagillapur, ex-Gagillapur, growth continues the way it is. Once the remediation happens, what's the incremental revenue that you see from that?
Well, first things first, we have about 11 launches just in the US that are still pending. And all of them are beautiful launches. So personally, I'm waiting for that to happen. So we are already gearing up for those launches. So as soon as we receive approval, boom, we'll hit the market. In addition to that, like I said, right now we took a little bit of a reduction in overall production just to focus on remediation. So incremental to the launches will be the volumes that we actually can manufacture at peak capacity. Then outside of Gagillapur, we also have GLS, the Genome Valley facility, which has already been commissioned for some products in the US, primarily monograph products. We're also expecting the FDA and other EU authorities and other regulatory bodies to come and audit that site over the next couple of months. And so we'll see incremental business coming from GLS as well.
Okay, so that's what I wanted to ask. You have 2 plants in the US?
Yes, we have one packaging facility and one manufacturing facility.
All right. So any kind of transfers that you're doing from the Gagillapur plant to, say, the US facilities simply because it meets the onshoring criteria, as well as the fact that, it'll mitigate the risk?
Well, the US facility has always been built for small volume, high value products. So any site, forget just our site, most sites, let me preface that, most sites in the US will not be extremely cost competitive when it comes to, say, an Indian facility or anything, say, a Chinese facility. So we are to mitigate risk, just in case, but the most important products for us. So we have done it. We have some BCS plans in place. We already have some tech transfers done, but the possibility of launching them from there, except for certain segments of the US B2C business, are very minimal.
Okay, so I just wanted to ask you about the capex plan as well, because you do have capex plan for your peptides. You have debt of around 700 crores on your books. If you, how exactly are you planning to fund that capex? How much is it going to be in terms of the peptide opportunity? And what does that do to your balance sheet?
Well, if you look at the overall net debt, it has been going down pretty well, even from last quarter to this quarter. Now, in terms of the overall capex for FY26, we have about 600 crores planned. I'm not saying everything is for Sen as of now. We have about 200-ish crores still that we have to pay for Sen. But apart from that, as of now, we're still gearing up on the commercialization of Sen, which we'll announce once we have that concrete. But apart from that, our capex for this year is essentially for every other expansion that we're doing, including some onco APIs and onco FDs, because we had, like I mentioned, or in our earlier call, we are focusing heavily on oncology. We filed 2 products, and we have about 11 in the pipeline. So we need some capacities already. We're already envisioning some lack of capacities once we launch them into the market.
So this implies that FY26 will be a year of, you building on the capacities and you getting your ducks in the line, and thereafter FY27 onwards is where we can see growth accelerate. So to that extent, could you give us a guidance for what kind of revenue growth can we foresee? Margins around 21% in FY25, do they sustain at these levels? And thereafter, FY27, FY28, what's the kind of vision that you have?
Let's just say for now, margins will sustain, but we obviously are planning, are strategizing, and are working towards improving the margins for sure.
That's the margin picture. What about the revenue? Because last 2 years, they were stable at around that 4,500 crore mark. This year as well, what's the growth projection? And the year after that, once you hit full throttle?
I'm not saying that revenue is not going to be a focus, but I would say margins will be more of a focus because of the kind of products and kind of business that we're trying to do right now. If you look at the segments that we're present in, earlier it was more backward integrated, high volume commodity products. Now we're doing really well in ADHD space, which we're expanding a few products globally. Then we're doing oncology and then peptides. So it'll be both, of course. It'll be revenue and margin accretive, but I would focus more on margins.
Okay, just a quick last question. In terms of your pipeline for oncology products, how many are you probably looking to launch in FY26 in the US?
FY26, nothing. We're just doing some API, small API business, but our first oncology business or product will be launched in FY28. FY27 possibly depending on some patent situations in the rest of the world. But in FY28 will be the first US and US launch.
All right, Priyanka, we're going to leave it on that note. It's been a pleasure. Thanks very much for joining in and speaking with us. So that is the management of Granules giving us a good picture in terms of what we can expect for FY26. They do expect capex of around 600 odd crores. And they have been reducing their net debt, which currently stands at around 700 odd crores. They will be focusing on margins as compared to revenue growth. And they are looking at probably resolving the US FTA issues in the next couple of quarters on one of their one of their Indian plants. We'll take a short break, but coming up, we'll focus on a lot more stocks and news on the other side. Stay tuned. Welcome back. You're still tuned into Halftime Report. Well, we do have a lot of stocks in focus, so let's concentrate on that. We have Vamakshi as well as Vivek joining in to discuss what they are tracking today. Well, Vamakshi, let's start with you. Z Entertainment is in focus as the promoters will be investing around 2,237 crores in the company. Tell us more.
Well, Ekta, the board has gone ahead and approved issuance of around 17 crore fully convertible warrants to promoter group entities. The issue price per warrant is at 132 rupees, and when we compare it to the closing price yesterday, it's coming in at a discount of almost 4.5%. The promoters are looking to invest 2,237 crores, and with that, their shareholding post this issue is expected to rise to 18.39% as compared to 4% currently. This in turn shows the kind of intent the promoters have instilled confidence in the mind of the retail shareholders as well. So therefore, it's a positive development. But Motilal Oswal says that they believe the promoter funding is largely being driven by recovery of dues of SL Group, which is estimated to be somewhere around 600 crores. Now, given, assuming that all warrants get converted into equity, we expect to see around 15% equity dilution. But the cash position of the company is quite strong, 25% of the issue price, if it is paid upfront, the company could almost receive 560 odd crores, which would then take their cash position to almost 2,965 crores on an immediate basis. So therefore, there are some questions that do arise in the mind of investors. Why was the equity dilution needed then, given that they have a very strong cash position, as well as the board back in July 2024 gave a nod to raise almost 2,000 crores via FCCBs, out of which only the first tranche was drawn, which was somewhere around 200 crores. The second is that they have given a broad strategy on how they would like to use this money, which includes strengthening financial foundation, fortifying core business segments, as well as exploring high growth and value accretive opportunities, but there has been no specific capital allocation plan. So the street will be also watching out for any specific developments or comments, especially on capital allocation.
Take that point entirely, Vamakshi. Thanks a lot for that. So that's about Z. We'll keep an eye out on developments beyond the headline that has come in, the fact that promoters have put in some money. But, is there more plan to this than just this is something that we'll most definitely watch out for. While Vamakshi was speaking, there was, news coming in on DLF, where sources tell us that their premium project, Privana, has sold out. They've generated sales worth nearly 11 to 12,000 crores within a week of their launch. 1,164 units implies that the average unit sale was close to around 10 crores. So you have 10 crore rupee worth flats selling out in a week, and 1,100 of them. That generates 11 to 12,000 crores of sales. That's about DLF. The real estate pack has been doing well lately. DLF just a smidge in the green on the back of that, maybe because the street wasn't surprised by the kind of response that there is to this project. But Vishal Megamart is the other stock listed only in December, where the promoters raised about 8,000 crores via their offer for sale. But now they've gone ahead and sold another 10,000 crore worth paper. Vivek joins in with more. Vivek.
Well, that's right. It's fundraising, especially via the block deal window. Like you mentioned, they took the IPO route to go ahead and garner close to 8,000 crores. That was via the OFS route. Remember, the promoter entity is actually an investment vehicle that is run by Partners Group as well as Kedara Capital. The promoter entity is Samayat Services. And today, last evening we understood that close to 10% of equity was expected to change hands. Given the good demand, the investment banking team actually went ahead and upsized the particular deal to close to 20% of the total equity. So today, in the trading hours, you actually saw close to 19.8% of equity change hands. helping the promoter entity garner over 10,400 crores, via this particular transaction that has taken place. At the end of FY25, that particular entity, Samaj Services, held over 74.5% stake. So at the end of today's block deal, it will be interesting to see who are the buyers. They'll continue to hold a little over 54% stake, and that's why all eyes will be on. Interestingly, yesterday was the day in which the lock-in window for the pre-IPO investment actually ended.
Okay, all right, Vivek. Thanks very much for that. We'll take a short break, but Sachidanand Uttikar of Trade Bills will join in with some trading calls on the other side. Stay tuned.
Welcome back. It's 100 points lower for the Nifty right now. We have the IT index, which is doing extremely well. So just take a look at the Nifty Bank. That's the one which is actually dragging the index right now, down almost 250 points. And what is it that is taking it lower? We have ICICI Bank, Kotak Mahindra Bank, Axis Bank, all of them which have moved to the low point of trade. So the Nifty Bank is actually broken below the 20-day moving average. So that's something we'll most definitely watch out for. This, even as the IT index is up around 1%. And market breadth has weakened. We started with way more stocks advancing than the number of stocks which are declining. And now the difference has completely reversed. We have around 1,500 stocks which are in the red for about 1,000 stocks which are in the green. That tells you a couple of things. One, the Nifty has been facing supply closer to that 25,000 mark. So yesterday's high and today's high have been very close, perilously close to the 25,000 mark. And there has also been a sharp fall in pharmaceutical stocks over the last 20 minutes or so. And it's been notable. Aurobindo Pharma, Lupin, Granules, you look at, Sun Pharma, Cipla, all of them are lower. What this has done is that with the Nifty Bank and the pharmaceutical stocks lower, a lot of call writers are back in action. So we have the 25,000 call, which is seeing writing for about 50 rupees. We have the 24,900 call, that too has seen a fair amount of writing for 84 rupees, telling you that levels closer to today's high and a little above 25,000 will continue to face supply in our market. However, will there be support in the very near future? Well, at 24,900 put, there is 125 rupees of premium. 24,850 put as well. There is a premium of close to around, the 24,850 put should come up for you. That's the one which has some premium on it as well, 100 rupees. So 24,750 to 24,900 is where support is. 24,750 to 24,800 is where the support is. Right now, as we speak, the Nifty is just above the 20-day moving average. The Nifty Bank has broken below that. So it's an important level to watch. A lot of long positions are added on Mazagon Dock. So that is one stock which is outperforming in an otherwise wobbly market. And stocks like CDSL and Manappuram. Remember, 9 stocks are in F&O ban. These two are the ones which are likely to exit F&O ban, if not today, then perhaps in the next couple of days. So I'll keep an eye out on that one.
Okay, all right, Mangalam. Thanks very much for that. Sachidanand Uttikar joins in to discuss the technicals of the market now. Sachidanand, welcome to the show. Well, it's definitely turning out to be a weak session for us. We seem to be on tenterhooks based on what's taking place on the geopolitical front. So in that context, what would your approach be to today's trade?
Good afternoon, Ekta. Good afternoon, Mangalam. Clearly, if you look at both the indices, Nifty Bank is one shade, weak. Clearly, if you look at the weekly charts, there's a, dark cloud cover kind of formation, which is awaiting a confirmation for its activation. But if you look at the overall range, 56,000 remains a very strong hurdle where its 5-day exponential moving average is placed. Unless we don't see the Nifty Bank closing about the same, there could be a possibility of further a decline going forward. But on the other hand, Nifty IT has been, doing phenomenally well. It has, started trending above its 200-day exponential moving average from last week itself. And if you look at the overall structure, it looks like a strong bullish flag formation breakout, which is still indicating that there could be a 1,200 points rally on the upside. So I think for the Nifty, it's a good sign, and the supports which are placed at around 24,700, 24,500, I think these supports will remain valid. And on the higher side, as Mangalam rightly said, 25,000 remains an immediate hurdle. So probably we may see some more range-bound action here. 24,000 24,770 can be an ideal zone wherein some long positions can be deployed on a decline. The stop loss can be placed at 24,710 on a closing basis. And in a day or so, we may see again a rebound towards 25,000 levels. So I think the bias for Nifty remains positive. But when we look at the Nifty Bank, we still see there could be some supply pressure, which may push the index lower towards 55,000.
So then how do you play in individual stocks? Do you have a long and a short as well to hedge, or both longs?
Both longs, Mangalam. I think the bias for the market is still positive. So if you look at the contributors here from the IT pack, TCS has again given a very strong rebound. It has maintained its closing above its 200 monthly exponential moving average support, which is placed somewhere close to on 3480. If you look at the put writing data, it is indicating that 3500 looks like a very strong, dependable support. Even if you look at the weekly RSI, it has managed to give a breakout above its previous swing high. So I think this is a good structure wherein there could be an extension of this particular move. Hence, we are recommending building long positions in TCS, keeping a stop loss at 3485 on a closing basis. Immediately, we may see an impact towards 3580. But eventually we see this move unfolding toward 3710. So a long call on TCS. The other pocket of strength is insurance stocks. And here, if you look at HDFC Life, we have already seen a V-shaped recovery in the last 3 trading sessions. It has maintained its support well at around 740, where its 50-day exponential moving average support is placed. From there, it has displayed a V-shaped recovery. If you look at the weekly charts, it looks like a rising 3 continuation pattern. So we are expecting that this move may extend eventually towards 810. And that's why we are recommending building fresh long positions here on a decline up to 770, keeping a stop loss at 758 for a pattern target somewhere close to around 810.
Okay, all right, Satyananand, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies and stocks. Well, we do have a couple of losers which are extending losses. Sun Pharma is now down around 2.2%. It has been the top loser on the Nifty today, and it's extended its losses. It's now down around 12.6% this year. Divi's Labs is down around 1.7%. Cipla also down around 1.5%, close to 1.5% at this point. So you are seeing weakness coming in to a couple of these pharmaceuticals and healthcare stocks. Apollo Hospitals down around 1.2% as well. We'll take a short break. Manisha Gupta joins in next with Kunal Shah of Nirmal Bang.
Welcome back. Joining us now is Kunal Shah from Nirmal Bang. Kunal, hi, welcome. Thank you for joining us. What's your sense really with the kind of big swings that we are seeing for many of these commodities? And I want to start with gold because we almost did 34.65 or thereabouts, and we're trading at around 33.85 right now. So from the highs of yesterday, we are down by nearly $80.
Yeah, Manisha, every time there is a peace talk and ceasefire kind of, or even a smallest news is coming and gold is immediately going down. So gold is not moving up on its own weight. It's only moving up because of the uncertainty arising from the geopolitical front. So the moment we see a mildest of the de-escalation in Israel and Iran, you will see gold immediately going down. I strongly foresee gold may not be able to move above $3,500 on COMEX, and in India above 1,02,000. I don't see gold going up immediately above those levels. So my view is it's a time to take profit in gold. I'm not saying that it cannot move up. It can move up, but logically this is the right time to book profit.
Kunal, Aziz said that perhaps with the geopolitics going on, it may be a $10 premium in case of crude oil prices at where it trades. How much of a war premium or a geopolitical premium would you say is gold carrying right now?
I think gold is having at least $100 of premium with the current prices. So if the geopolitical premium wades out, I think gold can go down by another $100.
What's your sense? I mean, as you said, there could be a profit taking coming in. How down under do you see gold prices then going?
Any ceasefire, I think gold will go down to the levels of 3350 or perhaps 3300.
For the silver prices, though, Kunal, we've seen some consolidation happen for a very long time now. Anywhere between 34 to 36 is how it seems to be trading at this point in time. What is your sense? Is silver a better bet, or with the gold prices expected to take or go down in profit taking, silver could follow suit?
Generally, silver follows gold, but I believe this time, in particular, this year, silver's fundamentals are extremely bullish, and whatever price spike we saw, and after that, prices are not showing any major movement. But I think prices are consolidating, and the likely move would be possibly a big upside, another big upside from here. So silver, I'm pretty optimistic as compared to gold. I don't see silver as a precious metal. I see that commodity as a proxy to industrial metals, EV, and all other stories. So silver's fundamental outlook is very bright, and one should buy the dips.
How are you also looking at the copper prices? Because we've seen some strength come into for that one. The dollar index is slightly on the weaker side. The Chinese retail sales data came in better than Street was expecting, and that has led to some supported metals, especially copper.
Copper, I'm bullish. There is a major supply side issue going on in Chile as far as the concentrated market is concerned. I've been speaking this for quite some time. In spite of China's economic activity have been contracting, we are seeing copper prices holding steadily above 760 rupees. So we are not seeing copper going down. I think the possibility for copper to move up is very high, considering the overall demand-supply scenario, especially the supply scenario. And that makes me believe that copper can test $10,000 in next 3 to 4 months' time.
Kunal, also, what's your sense on crude prices now? $8 of a swing in the markets yesterday, and we're looking at prices holding firm even right now.
I think oil, if you look at any blockage of Suez Canal, that can lead to $5 to $8 spike. Any major oil field getting affected in Iran can lead to a price spike. So there are a lot of ifs and buts. And I cannot tell you that you just buy. So I think I would believe that right now any decline to 6,000 rupees would be a buying opportunity, considering the kind of environment we are. Even if your stop loss gets hits, the right trading strategy, considering the geopolitical event in crude, would be buy.
And also your sense on the dollar index right now, because that also seems to be quite choppy at this point in time, given the fact that we've seen Bank of Japan come out with its central bank monetary policy announcement today. But we have the US Fed that comes in on Wednesday. You also have Swiss National Bank, China, Bank of England, all of those central bank meetings also happening within this week itself. Which one are you watching and what are you expecting?
I think the possibility of rate cut in US is very low, in spite of Mr. Trump has been insisting Jerome Powell to cut the rate. But I don't think so that's going to take place. And with oil prices again back above $72 for the Brent, I don't think so cutting interest rate would serve the purpose. As far as US-China trade war is concerned, that is going to be inflationary. 50% tariff on China and 10% US is going to pay. But that proportion, that is going to be very expensive. And I believe that considering everything, the US debt is definitely on the lower side. US dollar is heading towards 95 first and 90. So expecting a 10% cut in next. And the pace of de-dollarization is picking up further. So I think the fundamentals are not very positive for the dollar index.
Okay, all right, Manisha as well as Kunal, thanks very much for joining in and giving us all of that perspective. Well, we did have some statements which came in from Donald Trump which you need to be tracking, and that is from CBS, where he said he wants a quote-unquote real end to Iran's nuclear program, and they will be monitoring the Israel-Iran situation from the Situation Room in the morning. and they will decide when he gets back to DC on an Iran meeting. So these are a couple of important statements coming in, not to mention that Iran is quote-unquote very close to having a nuclear weapon. That is Trump talking to CBS, and those are some statements coming in. We'll take a short break, but on the other side, we will get you more on stocks. We'll get you a lot more in terms of specific companies. Stay tuned. Welcome back. Well, let's shift focus to the steel sector. Earlier, we spoke to Sandeep Pandrik, who is the Secretary, Ministry of Steel, on the steps the government is taking to protect the industry. Listen in.
There are like 2-3 kind of imports, as I said earlier. One is where the particular steel is not available inter-country, some specialty steels grades. So that's all right because those are not available. Second is based on lower price or dumping. That what the government has tried to discourage by imposing safeguard duty. I think that we have controlled to a large extent now. Based on the 2 months data of April and May, the total steel imports are much lower as compared to what they were in the last year. And if this trajectory continues, I think the steel imports will be about 50% lower than last year.
Right, so that is some important opinion coming in from the Steel Secretary. Meanwhile, we're still sitting with a cut of almost 100 points on the Nifty, below, actually above the 20-day moving average by just about 10 points. So we'll watch out for that. The market is at the low point of trade. It's led lower by the Nifty Bank, and all the other indices are currently under pressure, barring IT index. Take a short break, come back, get you more on individual stocks and the overall market at large. We were speaking about the pharmaceutical stocks. Just look at Divi's Lab, a big gash on that stock, currently at the low point of trade. Sun Pharma has been weak already and currently continues to remain weak. And now we're seeing some sell-off in a couple of these metal names as well. So we have Hindalco, which has come up for some selling. We have, Tata Motors, which has already been weak, was down 4% yesterday, has moved to the low point now as well. And another Tata Group stock, Tata Consumer, is the one which is at the low point of trade. But amidst all of this selling, there is one stock which is actually mildly higher in today's trading session, and that is on account of a standout brokerage note coming in, Schneider Electric. Nimesh joins in with more on that. Nimesh.
So now the stock is reacting on the back of a double upgrade from Goldman Sachs and Schneider. So they've upgraded the stock to a buy from sell, and they've raised the target price to 910. Now there are 4 key drivers for this upgrade according to the Goldman Sachs note. First and foremost, the increased TAM, which Goldman believes that it can go up to almost $14.5 billion by FY32 versus the current $9.6 billion. And also the market share for Schneider is likely to go up in the same period to almost 3.5% from current 2.9%. So that's the first big trigger. The second big trigger is the further expansion in the margins. So Goldman expects the margins to go up to almost 40% by FY32 versus the current margins of 38.5%. So that's going to improve the earnings as well. Third, the valuation is likely to catch up versus the peers like Hitachi on the back of this large order TAM as well as margin expansion. And fourth, the government support will mean additional revenue drivers for companies like Schneider. In fact, Goldman is expecting a 31% order inflow CAGR between FY25 to FY27 estimate. So on the back of a large TAM, a margin expansion, a double upgrade on Schneider to a buy now from Goldman Sachs, and they've raised the target price to 910.
Okay, all right, Nimesh. Thanks very much for that. We need to wrap up on the show with the news that the markets are seeing further pressure. Mid-cap index down 0.6%, Nifty down over 130 odd points. It's a wrap on Halftime Report. Business Lunch up next.